Hey, this is Mack with PriceActionTradingSystem.com. Today is Wednesday, October the 10th. This will be our price action chart lesson for today. And I've backed way out here. You can see this is today's price action starting right here. We started out in this range, but we broke lower, traded lower, and then into another range for most of the afternoon. But I wanted to show you this. I backed out real far. Generally, what happens, and again, nothing's written in stone. Anything can happen and anything might happen. But generally, when prices trade into a range, they're going to succeed breaking out in the same direction they traded into that range. So, in other words, here's the range for this morning. We traded down into that range. So the odds are we're going to trade down out of that range. Again, nothing's written in stone, and there's always a chance prices could break down here in reverse, and we get a reversal day. But the bias is generally for prices to continue on trading in the direction they were trading when they went into the trading range. And so we got the range here, and so here's trading down. So the bias is we're going to break out of this and go down. But here's your leg down into that right there. That's what you had. And so that should be a general target for the next leg, which is right here. So I was looking for a target of right down here, and you can see that's fairly close to where we got to. We broke just a little bit further and chopped around and then traded out of that. And we also, I'll show you later, we actually had a break of the trend, the little channel here, and a couple of different things I want to show you. But here's something else too. If you take the full width of this range, which there's the highs and there's the lows, and let's measure that, because this is just another way to kind of find a target. Once we broke out of this, you're trying to figure out where prices are going to go before they really bounce or we find strong. So there's the width of the full channel. And if you drag that down, look right there. There's the other channel. And actually, you might could have called that it because you get two touches. Really, probably that. You get the most touches right there. And let's just measure that and see what we get then. But you know, nothing's ever exact. You're just looking for something close, and you see that gets you pretty much right where the target. I'm measuring this one, but even if you measured from the highs to the very lows, I just want to see what it does again. And you go from the highs to the lows, and you can see that's pretty much it. So it gives you a nice idea of where to look for your target. So when you start to see resist or support right across here, that's important, because your range, your next range should be almost exact same as your first range. And also you can measure the leg that traded into the range and look for the leg trading down as well. And you see it gets you to the same spot pretty much. And we overshot it a little bit, but that's okay, because that's, nothing's written, nothing's perfect. A lot of times you'll get a perfect measured move, but a lot of times you won't. But generally when I'm looking for my entries, I'm looking for where you get the most touches based on closes as well. And so that looks pretty good right there. And I've already got this one kind of drawn in the right place here. And this one might have even been up right there based on the more closes and still getting the most touches. So we'll put that one right there. And I believe this one's probably right across here. But let's go ahead and talk about the trades. Your first trade was right here. You had a little double top, and if you bring that down, you can see that little double top right there. We actually broke higher. We tested that area again, so your entry's right there, and that was an easy scalp coming down. That was right at the open. And that's a failed second entry long, and we just had a double top, and this is a lower double top, and we have not come down and tested the lows again. So that's, you got to figure that's where we're probably headed. And I would have probably been using the closes at that point, and you can see we closed twice and we couldn't get below that. So a great way to enter this trade would be to drop a limit order right here, and when it ticked down, it stops you in. Or you still could have entered in this one right here because you got plenty of room back to the EMA. So either way you entered that one, it was an easy trade. Now this next one, you know, you got your lows down here where you get the most touches. The closes are probably right there. And this is a failed break lower. Notice I marked this one in green because the only way you could enter would be to enter above the red bar. And sometimes that's really dangerous. And but this, we got two legs down. We've got a failed break below 1, 2, 3 lows right there. And there's plenty of room back to the EMA. We didn't go very far below these lows. So that's a good sign. And again, I marked this in green because it's better to wait on a green bar. And by the time that happened, you were way up here, and it's way too late to be entering. So, so this was the way I would describe it, this is a more aggressive type entry. And I would just recommend for you to stay away from those unless you really know what you're doing, unless you've really been used to watching price action. And then after we went up, we went into all this chop, so it was risky entering. There was actually a long right here, but again, it's risky because you got all these ties right here, and you're still coming out of this chop. So it's better to wait on prices to break out and fail, and you see what happened. They broke out. They tested this high and failed, and so you get a chance to get short way up here. That's an easy trade. Prices did back up and hesitate a minute. But any runner should have been safe on this. And look, you're long from the very high of the day almost. And you can ride this all the way down here, and you know where your target is. It's right in here where this line is, and that's where support kind of sits, the biggest part of it. And so this is a great entry. And there was actually another entry right here, but this one's risky. I didn't like this one because you got the two overlapping bars. You just came out of some chop, and you see we did go back up again. And but then we're even lower. The entry's even lower here. So it was better to wait and let it, because you see we're testing this trend line, but right here we got these lows, and now we kind of got a breakout pullback short. And we're still looking for prices to probably come way down here and test these lows. So you got enough room to come lower. So, you know, really, and I almost wish I'd have put this one in green too, but I took this trade. So, but now you got 1, 2, this was the third test of that trend line. And that made me feel pretty good that we were probably going to at least come down here and test these lows, which now are way down here. And so that's what I was looking for. I was looking for a reason to get in, and it was just really too choppy in here. But now, and if you draw this up here, you can see it a little better. You can see we got a breakout pullback short right there. And we were looking for prices to try to come down to the lows again, and that's where we came to, and we broke a little bit lower and failed and then went higher. And I got at least 2 messages from people that took this trade right here to the long side. And the reason you wouldn't want to take it now is we've got this down sloping trend line, which hopefully you could see, and we have not touched the lower side yet. We haven't broke the trend line yet. So there's a lot of reasons to be thinking, you know, we could go lower and actually take out this low. And you see that's exactly what happened before we got a decent bounce. We took out this low. But now look what also happens. We broke below the trend channel. And if you just copy that line right there and drag it down to the lows, now we broke below that, and so we've got a little overshoot right there. So I probably should have marked this one green, but I see so many people counter trend trading, you know, trends like this, and it's just too dangerous, and you're better off just to wait, because there'll be another better entry up here. But if you want to be real aggressive, notice that one tick lower, and then prices turned up, so break above that bar would probably take you back to the trend line, the EMA, and that's exactly what happened. And we also tested the breakout area again, and it held. And notice we couldn't close above it. So now you got 2 legs up. You got 2 tests of this area right in here, and That's the first real break of the trend line, so we're still looking for shorts. And you got an entry here. And again, your runners would have been safe on this one. And then you got another chance to enter right here if you didn't enter up there. Now this one's getting a little more risky because we bounced in here and we got all these stems here. But this is the first break of the trend line, so you got to figure we're probably going to at least test these lows, and we're probably going to try to make a measured move based on a couple of different ways. We showed you that. So, you know, we were looking for prices to maybe come down here, but you got to be careful with that because prices can bounce out of here. But this is a fairly safe trade. Everything's still below the EMA. We're, you know, both of these closes were below the trend line, so you got a chance to go short right there on a second entry, and you figure your next leg is going to be similar to that one, and it is real similar. Before we had a little bit of a bounce. No setup to go long on this one, and we continued to go down and down, and there really was not a good setup to go long at all because you got all this overlap, and that's generally acceptance of prices at this level. And even though we bounced out of here, now we finally got along right here. Now we've had the trend line break. We've got a couple of legs down to a new low. We broke out. We came back and tested. Putting a limit order right here was a pretty good trade because you got this congestion. You know what happens usually when you break out of it, you're going to fail. And notice we traded up into that congestion. And so you could have gone along here or with a limit order here, either one. The better trade is probably to wait till this bar closes because sometimes they'll fool you. And so either way, you would have got your scalp out of that. Nice, easy scalp. And then suddenly we break higher. There was actually a long right here, but I didn't mark this one because we got a lot of overlap. But you do have a trap right down here. So if you saw this and you took it, that's a pretty good trade. And it just fools everybody. And notice that I drew this trend line. Notice how I drew these trend lines again. I've been doing this quite often, and they give you a really good clue of when to enter. Notice this one. We broke the trend line, and we came back and tried to test the high and then sold off. Right here, notice we're going up. We finally get a close below the trend line. We go up and make a new high, and then it sells off. Notice this one. I'm coming along up the closes. The first time we got a close below was this move here, and then we come back up and test it, and then we sell off. So I encourage you to continue to use that. I've had some, I've been experimenting with it some, and it's really worked well. And just to give you an idea, now you got a trend line coming down right through there. We broke it, but you don't go long on that. You wait until it comes back, and it tested it, and then it bounced up. And I don't know if this one would have worked. 1, 2, 3, 4. Yep, you still would have got a scalp out of that. I was done trading by now. It would have been good for a scalp. And so another nice setup. But again, the way to trade this is to drop a limit order down here below these stems, and you see what happens. It breaks one tick lower and then reverses, and so then you get a couple points out of it. And most of the time you can do that, but you got to be careful entering with those limit orders because, you know, if you come down here and you enter right here below these two, or let me just find a good example. Most of the time they work. See how well this one worked? Once you got two matching bars at a strong low, we ticked one tick lower and then turned up. Here you are again. You got two bars. It broke lower and then it turns up. And you'll see the same thing at the highs. Let's see if we can find one. You got a couple of matching bars here. We broke above it, and look what happened. You turned down. And sometimes you miss these trades, but they happen quite often. I don't see any more. But anyway, you kind of get the point. It generally works best if it's a strong support or resistance where you look for it. And this is a similar example. There's only one bar here, but notice how we broke lower at the trend channel, and you probably would have drawn this right off that low right there, and you can see we ticked one tick lower and then reversed. But that would be really dangerous because a lot of times you get a strong overshoot right before a reversal, so we could have well overshot that and then reversed out of here. But that's why you got to look at all the pieces of the puzzle. But this is just basically a double top. I think I covered all the trades. I got kind of sidetracked there talking about those 2-bar highs. But anyway, it was a fairly decent trading day. There weren't a lot of really big moves. And if you got in here, there actually was a good runner on this one all the way down to the low side. If you got in here, same thing, another good runner down to the low side. If you did happen to enter here, there was a good runner all the way back to the high side. But this was the key entry point. And if you got short here, then you were likely able to ride this all the way down today. Or at least ride these two down to the lows. Again, this is a more aggressive trade here. And again, a runner was good on this one too. And you notice this one, they came back and got the runner. And a lot of times these pullbacks, that's what to look for. Look for where the entry was. Let me just show you a couple of those and then we'll call it a day. Let me put the crosshairs. Notice the entry on this one tick below this bar is right there. And look where this pullback came to. Just enough to take out all the break-even stops, and then it runs down again. And let's see if we can find another one. This was your entry from earlier this morning, and look where this move went to. It got a little further. Your entry was right here, one tick below that, and look how this pulled back, took out all those stops, and then sold off again. There's just no freebies. And here's another one. There was your entry on that second entry short right there, and then we pulled back and took out those break-even stops and then sold off. I mean, there's just no freebies, and the ES is really efficient, and they're famous for coming back and taking out stops and so forth, and they do it quite often. So just be aware of that and be prepared for it. And let's see if I can find one more, and then we'll call it a day. Yeah. Well, here's one. If you did go long here, it was above this bar here. This is not a great setup. But look what happened. We went up, we pulled back, took out those break-even stops, and then went higher. And you'll see that over and over and over. It's just a really efficient market. And, they don't like to leave those runners. You got to get in at the key points to really get the runners. And you got to be willing to, it's hard to, you got to have stones to short this up here. But that's what you got to learn to do. And trust it, and the thing is, you can always get in with a really tight stop. And if you're wrong, you lose a few ticks. But if you're right, look at the reward. Same thing down here. If you're wrong, you got a really tight stop. One tick below here, and so it's about 1, 2, 3, maybe 3 or 4 ticks. But if you're right, you get to ride this all the way back to the top, and any runners were safe. Same thing right here when this was bouncing out of here, but you got to realize there's been no break of the trend line yet. So this is the first trend line break. So you go short right there. And this time, notice how they didn't get back to get those stops on this one. They couldn't quite pull it back. They missed it by a tick. And so the rewards, there's a little more reward for being taking the more risky trades than there are the less risky ones. So keep that in mind. But I'm going to wrap it up. Hope you had a good trading day. If not, hopefully a better one tomorrow. Study your trades and your charts at the end of the day. Compare yours to mine. See if you're seeing the same things I'm seeing. And that'll definitely help you. But the real key is to put your trades on your chart and study them and just follow the price action. First study your trades, and then even after that, just start at the beginning of the day and put your chart over here like so, and then just start following the price action and see if you can spot the trades. And look and see what you did right, look and see what you did wrong, figure out why you were wrong, figure out what was right about what you did right, and you'll get better each day. And that's how you do it. And that's why I'm such a big proponent about studying your charts and doing your chart studies every day. And that's why I like to do this chart study myself, because it forces me to go back and relook at everything and compare my trades and see what I saw or what I didn't see or where I was wrong or where I was right. And I try to learn from it. So But we're getting into 20 minutes almost. I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.